All right, slash NRAM. So we talked about GDP at the beginning of class last period, right? It's the selling price of all of the goods and services on the market. We went ahead and we calculated the GDP for a very, very simple, small economy called Arcadia that has apples, bananas, and shoes. So it's just the market price times the quantity. That's the individual GDP contribution. We add all of these up and we end up with a total contribution of $64. So any questions on just the aggregation, the aggregate nature of it, that we're just looking at all the different individual contributions. This is the GDP contribution from apples because we sold 4 apples at 25 cents each. This is the GDP contribution of bananas because we sold 6 bananas at 50 cents each, so on and so forth, right? Pretty simple. Okay, cool. So there are some non-market goods that are included. So specifically, government goods and services, they have no market price. These goods have value, we know that the addition of these goods, it increases overall output. And it's in known quantities. But that price is not there, right? Since they're not selling this, we have no market price for them. So how do we value those government goods and services? It's a great question. We value them at cost. So what is one of the possible deficiencies of doing this? Is that it might overstate, so it might state a GDP that's actually larger than it really is if there's waste and inefficiency. So one of the key parts of our definition of GDP is that it's the final goods and services. Final goods and services. Why are we saying final so much? These are the goods and services that are consumed by the end user or ultimate user. End/ultimate user. So these final goods, these are the end products of production. And these are absolutely, yes, included in your GDP calculations. Whereas, you guessed it, there's a different type of goods and services. We're going to call them intermediate goods and services. So these are intermediate goods and services because they are just that. They are in the middle of the production process. They are used up in the production of final goods. So we do not include these intermediate goods in GDP because if we did so, we would be double counting. So classic example, I am building a house. I'm buying all this material from Home Depot, and then I'm also selling this house. So the price of the house has the materials built into it, right? So if I counted both the sales at Home Depot and the sale of the final house, I'd be double counting those materials that I purchased, those intermediate materials. So same thing with coffee beans of a coffee shop, milk at a frozen yogurt stand, right? So anything that is used up in the production process is not counted. Only those final goods and services that the consumer consumes, right? So it's not another producer that's buying it for some reason. That makes it an input. So it's got to be the final good and service that a consumer. Yes.
So I guess how do you determine which is which? Like, how do they distinguish which is which? I guess if it's like, do you know if it's going to a yogurt stand or like to someone's house? Because it's a final good if it goes to like a consumer, right?
Right. So they do their best. So for some places like Home Depot, it's very difficult, right? But Gesundheit. But for other places, like Cisco, for instance, right? It's like the giant national chain that provides all the restaurant stuff to all the restaurants, right? Like that's all intermediate goods. So they don't count that as part of it. So there are economists somewhere that are like doing some sort of calculations, and they're probably looking at a sample month of consumption, and they're like, okay, out of this month, so much of the consumption was commercial related at Home Depot and those type of, you know what I mean, or out of a given year. So they probably have some estimate of the degree to which, yeah, but it's not exact. It's not exact.
The business isn't responsible for like.
No, for reporting the GDP, for reporting the numbers or whatever. No, I mean the business is the government will have some information on that because the business is gonna write off all those costs. So that's the other thing too, is that there is information at the end of the day when they file their taxes. It's a good question, very good question. I had the same question when I was learning this. How do they know that somebody's buying a sheet of plywood for themselves or to go build a house, right? And the answer is they don't. They do their best and they guesstimate. There's some percentage that on average tends to be commercial compared to residential. Very good question. Okay. So this is exactly what this next part talks about. So goods can be final or intermediate. So something like milk can be a finished product, final product, and it can also be an intermediate good. So the final product, right, that'd be all the gallons of milk in the store, in, like Walmart or whatever. But I mean, again, it's tough because like I know for a fact that like Bean Broker and other places, like they buy their milk from Walmart, right? But then, there's gallons of milk sold to restaurants through something like Cisco. And so we only count final goods. Now, of course, there's a bit of an in-between, right? So in between intermediate goods and final goods are these special things called capital goods. And we've already talked about this a bit, about what capital is compared to money, right? So capital good is a long-lived good used in the production of other goods and services, right? So my computer, right? My computer is a capital good. I don't use up a computer every time I teach a class. That'd be pretty amazing, right? A piece of factory equipment, right, that is doing the welding or whatever, right? That's a capital good. So anything that's not used up in the production process is a capital good. So if it's part of the production process and it's a long-lived asset. Computer, a building, a factory, right? All that kind of stuff are capital goods. Stoves in restaurants. Delivery vehicles. And like I said, houses, apartments, motels, stores. And the key thing to remember here, the super key important thing, which I've stated a lot, is that money is never a capital good. Never, ever, 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 ever. Capital good is referring to money that has been mobilized, money that has been utilized and purchases some sort of long-lived asset. That's when it becomes capital. So there is a term that is actually more important for our European counterparts, our EU neighbors, brothers and sisters, because they have something called a value-added tax. But it's still important, so we're going to learn about it. So value-added, what does this mean? Value-added. So the value-added is our market value minus the costs of all the inputs. So for instance, right, we have hot and fresh, they're buying flour and other inputs for $120. They are getting revenues of 2. And so the value added is 80 cents. Right, we just take 2 minus 1.2. So that's again, so at the end of the day, that's what we're trying to get at, the value added. So another part of our definition for GDP, right? It's final goods and services that are domestic, right? So this is gross domestic product, right? And this is where that domestic word comes in. So this is the produced in a certain country in a period of time. So it doesn't make sense to say that the GDP on January 1st was 17 million, right? But you would say the GDP for 2016 was 17 million, or the GDP for January was 4 million, or whatever the case may be. So it's the period of time is important, right? This is not a stock, this is a flow. And that's why we have to talk about it in a period of time. And domestic means that the activity, the production activity, is measured within a country's border. So, a Japanese firm that's making cars in Georgia is part of our GDP. It's happening in Georgia. Doesn't matter who owns the company. There's another term which we don't define, but just to give you a counterpoint, gross national product, that would be all of the stuff that the United States produces, even the stuff abroad. So all of the assets that we have abroad, all of the factories that we have abroad, all of that kind of stuff, any kind of auto factories that are abroad, those would count towards our gross national product. So when you hear national, that has to do with ownership. When you hear domestic, that has to do with borders. That has to do with where are they physically located. And the value must be produced in that year considered. So if you sold a 20-year-old house for $200K, there is a $12,000 of commission that you paid. And so that is actually the only value added that we find. Why is that? Because the house is 20 years old. It was not produced in the period of time studied. So we don't count income that's generated from the sale of used goods. So if you go and you buy something from Goodwill or Plato's Closet or recycle clothes or whatever the case may be, right? That's not counted as part of GDP. It's only the things that we produce that are new in any given year. So there's a couple different ways to measure GDP. One of the most popular ways is what's called the expenditure method. And this is something that we are going to be coming back to over and over and over and over and over again. So again, big stars next to this. It's a defining thing. I mean, even at the beginning of grad school, we came in and they were like, okay, what's the definition of GDP? Like, let's talk about that. Let's just go from that basics. And we were all like, right? So please remember that there are always within the expenditure model. So the expenditure model is what? It's about the money that we spend. That's what expenditures are, right? And we have 4 users of the final good. And the 4 users that we have, we've got households, we've got the government, we've got businesses, and then we've got foreigners. So all goods produced are purchased by one of these groups in a given year. So we have this assumption here. And so therefore, the amount spent will equal my market value. So GDP can be measured 2 ways. By the market value or by the total spending for final goods less, so minus, the value of imports. So we'll get to that and why that is in a second. So the first one we're going to talk about is consumer expenditure. So consumer expenditure here, let's see, consumer expenditure was $14 trillion last year, or 2019. And of that $14 trillion, we split that up into 3 categories. We have durable goods, we have non-durable goods, and we have services. So durable goods were about 1.5 trillion. Non-durable goods were about 3 trillion. And services was about 10 trillion. Sorry, this is 14.5 trillion. I can do math. So what are these definitions, Dr. McCarthy? Well, durables are long-lived consumer goods. So what are some examples of durable goods? What's a long-lived consumer good? A washer and dryer, very good. How'd you get to school today? Car, very good. What are you going to plop your butt down on later when you go back home? Your couch, your furniture, right? That new Xbox that you're getting in the mail today. I'm not jealous at all.
It's updated in my room.
And all those appliances, right? So those are durable goods. Those are the things that are meant to last. Non-durable goods, these are shorter-lived goods, right? So these are things like clothing, food, and bedding. You should be changing your bedding more than you probably are. You should be washing it more. And then services, this is our largest sector, right? This is where we make our bread and butter in terms of we are a service-oriented economy, right? 10 out of the $14.5 trillion that we spend is on services. So what are the services? Well, there's the stuff that we're doing today, education. There's taxi and Uber rides and stuff like that, right? Haircuts, etc. Financial services. That's a big one. We provide a lot of that to the world. So any questions on consumer expenditures in our 3 categories? Sweet. All right, moving on. Next category is investment. Investment. So investment is spending by firms on final goods and services. So specifically, a good buzzword that we have here is business fixed investment. This is purchases of new capital goods. So plants, property, equipment. Also lumped in here, which is probably one of the more annoying things when we talk about this definition, because you're like, oh, investment, like businesses, right? And then all of a sudden it's like, but also part of investment is any new residential real estate. So we call that residential investment. So any construction of new homes and apartment buildings. And then the last one, what happens when those businesses can't sell all of that stuff, right? So if they end up producing way too many thingamabobs or whatever, jiggamer whatevers, right? If they end up producing too many and they can't sell them all that year, and if they're not going to go bad, then what are they going to do? They're going to invest that in their own inventory. So we have this inventory investment. Inventory investment is the change in unsold goods to the company's inventory. That should be Y apostrophe. So these are all goods. Not really services, actually, right? It's hard to produce a service and not provide it yet. So these are all goods that are produced but not yet sold. And this entry in the calculation, this can be positive, which is an inventory buildup, or negative, which is an inventory drawdown. So remember, financial investment, all of the times, so when we purchase, if you go on Robinhood or whatever, right? If any of you like bought GameStop or AMC or whatever, right? If you purchase stocks or bonds or other financial assets, these are just transfers of existing ownership of those assets. All right, so it's important for us to remember that buying a financial asset does not correspond to increases in physical capital or production capacity. However, there is one exception to this. Does anybody know what the exception to this rule is? So what happens when a company goes public? When a company goes public, they issue a bunch of stocks. When the company issues new stock, which is oftentimes called an IPO, which is initial public offering. When they are issuing new stock, this can, but not always, correspond to a buildup of physical capital. We just use K for physical capital because it's German in origin, and capital in German is spelled with a K. So economists everywhere use K for capital. So it doesn't always, right? They could go ahead, they could issue new stock, and then what could they do? They could go ahead and use that cash to buy back existing stocks. First you're whispering, now your phone's going off. 2 demerits. So economic investment is the increase in capital goods. So this is financial investment, right? Up here, right? When you buy a financial asset, it does not correspond to an increase in the physical capital or production capacity. So that's the term financial investment, compared to when we use the term economic investment. This is specifically an increase in the capital goods used to produce other goods.
Wait, what does K stand for again?
Capital, physical capital. And this is based on the purchasing price of whatever that capital good is, not the stock price. So the stock price has nothing to do with economic investment. Something that's hard for us to disentangle because we just kind of conflate those two things for most of our lives. But they are very different things. Financial and economic investment are very different things. Sometimes they correspond, right? There's a Venn diagram, there's some overlap, but not always. Not always. All right, government purchases. I know this is kind of a bit of a slog today. I'm sorry. Government purchases. So the government, right, they purchase a lot of different things, right? So these are final goods and services, obviously purchased by the government, right? Government, Uncle Scam. And so government services, right, these are fighter jets. It's also teaching. It's also office supplies for the, I don't know how many federal workers we have, but we have a lot of federal workers, right? So it's just office supplies for all those kind of people that are, you know, at the Bureau of Labor Statistics or at the EPA or whatever the case may be, right? I mean, this is also like roads and infrastructure and things like that as well. Not as much as we need it to be. The civil engineering corps keeps on, we get like a lower rating every year. But to be fair, it's in the civil engineers' favor for us to have a low rating because it's going to create more jobs for the civil engineers, right? But at the end of the day, I don't think the civil engineers are like padding the numbers to try to give themselves more work. I really think that there is an infrastructure crisis in the United States that we need to really jump on, because otherwise we're going to have bridges and stuff starting to collapse soon, and that's not good. Nobody wants that. So this is actually, this actually is near and dear to my heart because this has to do with my research. So whenever we're talking about government purchases, this excludes any kind of transfer payments. And so what are transfer payments? So the definition of transfer payments is that these are payments made by the government but the government receives no goods and services from it. So the book only talks about Social Security, right, which was a program put in place after the Great Depression because there were no safety nets in the Great Depression. So we had grandpa and grandma and aunts and uncles on the street begging for food, selling whatever they could to try to live at very, very, old ages. And so we decided, okay, we're going to forcibly take some of your money, set it aside, put it in this pool of resources, and then as soon as you hit this age, you're going to start being able to draw like a minimum amount of money so that you can at least have your bare necessities made. And I mean, the various success of that is a whole debate for another day, and the soundness of it or whatever, right? People, It's not the big pool of money like it should have been because of other government programs kind of interfering, but it's neither here nor there. Social Security is a valuable, important safety net, and regardless of what anybody tells you, it's still going to be there when we retire. I will bet you a Bitcoin. Then we also have food stamps. Food stamps is a transfer payment, right? The government is giving this money. Now, we don't call them food stamps anymore, right? They're called SNAP benefits. Supplemental Nutritional Assistance Program, right? But the book still uses that old term. But the one that I really care about, because this is near and dear to my research, so I study the monetary consequences of U.S. military presence abroad. So not only do we have bases in 77 countries and millions of troops that are located overseas, but we also give millions and millions, billions of dollars to countries every year just in the form of economic and military aid, right? So this excludes all military and economic aid, which is, a huge bit. I mean, we pay for 20% of Jordan's annual government budget every year because they're our best friends in that region. And we've been training with the Jordanian Air Force since Jordan became a free country in 1973 or whatever. We've been close allies with them forever. But that comes with a price. Every year we give them 20% of their total government budget. Just thanks for being friends with us. Thanks for letting us have troops there. None of that's counted as GDP. It's not counted our GDP. It's not counted in their GDP. The last thing that's excluded from all of this stuff the interest paid on the government debt. So, it's as good a time as any to look at the debt clock, right? Ignore that I spelled clock wrong. Cloche. So here is the situation. Our gross domestic product, I can't zoom out anymore. Oh, interesting. So our gross domestic product is 22 trillion. Here is our debt. Our national debt is 28 trillion. If we divide that by the citizens, it's 86,000 per citizen. If we divide it by the taxpayers, it's 228,000. So what's going on there? Not everybody that's a citizen is a taxpayer, right? A lot of people don't pay income tax. They don't make enough money. So this is our federal spending. And this is essentially, so we only are making half the amount of money, right? Our budget deficit is 3 million. So we're spending 6.8 million, and we're only bringing in 3 million, which is why this grows every second. Every second of the day, our debt's growing. So the interest payments that we make on it are right here, total U.S. interest paid. So we have paid $3 billion in interest, about $15,000 per person. Yeah, so there's a lot of very interesting stuff here. U.S. debt held by foreign countries, right? So this is the big one everybody's always, worried about. That's the treasuries that are owned by other central banks and other sovereign wealth funds and stuff, right? That's $7 trillion. It's a significant amount, but it's really not that much compared to the total. Why does I keep doing that? So anyways, I'll put a link to this. It's a very interesting clock. It's got a bunch of different ratios. Here's the jobs, right? Here's the self-employed. Here's the not in the labor force. We got 100 million people not in the labor force? No, that can't be right. Oh yeah, no, that is right. Yeah, because we have 400 million people in the country. Yeah. There was 605,000 bankruptcies. There's 18,000 millionaires. There's 40,000 food stamp recipients. Social Security, right? All this other kind of stuff. So, anyways, very interesting national debt clock. Highly recommend taking a look at it. We'll finish off there for today. I'll see you guys on Monday. You have an assignment that's already there, the activity assignment for Friday, so please go ahead and do that. I'll update y'all's grades today and tomorrow. Oh, crap. Let's do attendance real quick. Just come tell me your name when you're leaving. Maybe I should just have everybody sign a sheet. Can you just sign the sheet? Perfect.
Oh, this one?
Yeah. Can you just sign the sheet for attendance today? Sorry. Well, we can sign more sheets. Perfect. Do multiple.
Oh, that's just messing up his Charlie Rose monitors.
Thank you for the question, Sydney.
Yeah, of course.
Appreciate it. Always great when there's some interactivity.
Awkward question, but
Yeah.
I was gonna ask you. Are you the one who comes into the Fur Trade Museum with your daughter?
Yes!
She's like tiny.
Yes!
Yes.
That was
yes.
you?
Yeah.
Oh,
I'm the
awesome.
one who helps there, but you should look into getting a membership.
I did get a membership actually,
Okay,
because I
well,
went there.
great,
I went there
yeah.
with my parents when they were visiting,
Okay,
and
cool.
so it was like I was like, well, I could pay for 5 people,
Or I could pay
just
the exact same price. For
get a membership.
for the
Yeah,
adventure.
exactly.
Yeah.
Awesome, cool. I thought it was familiar, but the mask, you know.
Yeah. Well, I'll see you out there.
I will definitely see you there. Yep, she loves it.
Oh, shoot. There's a lot of them.
I mean, I was trying to get people out.
Yeah. Sorry, my bad.
No, you're good.
Thank you.
Of course. Thank you guys.
Everything's pretty well good. Is this the sign-in sheet or?
Yeah, it's just
Oh,
for
okay,
attendance.
That's what I had assumed.
Yeah.
You know, I did not realize that you were the advisor for the Employee Sports Club.
Yeah,
I
man.
forgot about that.
Yeah.
Yeah, because I'm one of the managers.
Oh, got it. What's
Yeah,
your handle on there?
Sinful You.
Oh, okay.
Yeah, that's me. He's a manager too.
Ah.
Yeah.
Yeah.
Huh?
What's your handle?
Hamburger.
Oh, your burger! I love your comments. It's so funny. I love that. I was chuckling about that. Yeah. Yeah, I'm trying to get back in there more.
Okay. Yeah, we
When
saw
I was-
you were playing World of Warcraft.
I was playing World of Warcraft and I was playing some Hearthstone last night.
Yeah.
My friends have a Discord server they're on like every night, so
Fair
I'm
enough.
gonna start getting on more.
Yeah, no, we've been practicing a lot of Overwatch recently.
All right, I'll jump back in. Sweet. Have a great one.